as we talk a little bit more, Matt, about this ongoing issue with the markets and how they're pricing things, is there a way that we can look perhaps for investors to hedge traditional portfolios? What exactly are you seeing in terms of maybe some contrarian ideas that are coming into favor with regard to some of this particular type of move? We've talked oil and gold, and maybe I've even alluded to crypto and Bitcoin, but how exactly are you seeing possibly either investment advisors or retail investors maybe look to kind of position themselves given what we are seeing in the news right now?
So I think there's been a handful of trades or allocations that would sort of intuit where advisors are starting to position for this market to sort of mitigate some of the geopolitical-led volatility. I mentioned it earlier: gold, inflation-linked bonds, even short-term T-bill ETFs. Going into cash in case risk premiums widen, you'd be sort of insulated from that perspective. But one of the areas I think we've seen allocations, it sort of exists outside of the geopolitical sphere, and it's actually more fundamentally driven. So we've seen sizable inflows in the communication services ETFs, roughly about $1 billion or so. And we think about, what are some of the other mega trends or headlines going on about there? And it's AI, it's enhanced connectivity, cloud computing, and that's really where communication services firms really live, right? They're able to, have that exposure to Magnificent Seven, high cash flow equities, low debt to equity. You're not really going to be impacted by the Fed keeping rates elevated for quite some time. They're more service-based. They're not going to be embroiled in a lot of the tariff-related volatility. So I think that's one area, is like look outside of the sort of cause and effect relationships we're seeing from a geopolitical and macro perspective, and where there are fundamental tailwinds to help sort of insulate from the macro. I think communication services is one of those, and we look at it on a cross-asset momentum trend basis. It ranks one across all other sectors when looking at our momentum ranking too, and I think that speaks to some of this fundamental durability.
All right, and of course now there are ETFs where you can track some of those specific factors that you're referring to as well right now. John, I'll end with you and maybe some of your best ideas given what we are seeing right now. Is there anything that you think, given the recent price action, might be an opportunity or a place you want to go to in terms of a possible relative safe trade?
Yeah, so I'll give you two ideas. One is an ETF we manage, PPI. The second one is from Bank of New York Mellon, BKGI, which is an infrastructure ETF. So, 3.5 years ago, M2 money supply exploded. We increased our balance sheet. We flooded, the market with dollars. And, in my economics 101 class, they taught me that if you restrict supply, you increase demand, prices go up, inflation goes up. So we launched PPI, and in the last 3.5 years, we've beaten the S&P 500, and no one thought that inflation would be, higher, sticky for longer. So we beat the S&P 500 by about 500 basis points. Year to date, it's up 11%, as you see on the screen. S&P is up 2%. So nice, relatively, healthy outperformance. And, gold is actually like 9% of this fund. So it's a very high conviction view that we have. The second one is BKGI, which is on the screen. Infrastructure stocks. It plays into also this elevated levels of inflation. It's a global basket. It's up 27% year to date. You don't find too many things that are up that much in the marketplace. So it kind of tells me that, there is a trend. It is clearly, an elevated level of inflation. And just these are cheap stocks at the end of the day. The PE ratio of BKGI is 13. So our fund PPI is about 16. So S&P 22.5. So, the idea is that you want to mix some of these idiosyncratic bets in the portfolio. They are value stocks. Value investing can work, even though that gets a lot of scrutiny. But, both the plays on just, kind of real assets, elevated levels of inflation.
All right. A fascinating conversation. We could go on for hours about this, but thank you very much to John Davi and to Matt Bartolini. Remember, you can catch that and all of our ETF Edge installments. Just head over to etfedge.cnbc.com. Thanks for joining us here on ETF Edge. We'll see you next week.